All right, we are live. All right, good morning. Good morning. Welcome to the Russell Journal. I am Russell Liss, and you are watching my journey from 10 to $1 million. You can see from yesterday, if you were watching yesterday, we've gone up from 711 to $769. A little bit of change on there. Moved up over the $750 mark, really eyeing that $1,000 level. Would love to get there. We will see how that goes today. So with that sort of setting up into looking at what's going on today. This morning, we got those retail sales numbers, came in high at 3.1%. So we did get fairly good retail sales in January, but let's keep in mind that those numbers do not reflect inflation. But that doesn't mean the market goes good, bad, good, bad, good, bad. Is this good? Sounds good. We're going to buy. Okay. So what it does say is that those numbers came in high. It was a beat on expectations. So what we're looking at then is that the market's going to say, well, we're not seeing a rejection of what we're looking for is people to reject higher prices. We're getting higher than expected retail sales. So we're not, so that means that the consumer isn't rejecting higher prices. And this is reflected by every corporate earnings that we've had so far this year, where basically during all of these earnings, all of the earnings have said that we are raising our prices, we have pricing power, and we are capable of handing that off to the customer. Okay. Now, I will say that this is probably the beginning for this. And unless they bring that inflation under control and bring those higher prices down at some point, we are definitely headed for a recession. I know that 50% of this country cannot afford those higher prices. But until we have an actual confirmation of this, really won't look to see this major move down. Now, there's one other thing we have, the FOMC minutes from January's Fed meeting. Now, we're all pretty well aware of what was said at that meeting because Jerome Powell came out, made a statement about what was said at that meeting. So I'm not really expecting any surprises. I'm still expecting the whole process to go like this. We end our purchase, our quantitative easing. We're going to stop buying bonds, mortgage-backed securities, and other such things. The second thing that they're going to do is they're going to raise those interest rates. And the third thing they're going to do is start to unwind that balance sheet, meaning they're going to get rid of they're going to be getting rid of the bonds that they're and assets that they're holding on the balance sheet. Okay. All of this information right now points to the fact that the Fed can do this. Okay. So as of right now, the market data says it's 100% okay for the Fed to go ahead and raise interest rates and do that at an accelerated pace. So we may possibly see that acceleration, but after Bullard's comments from last week and around the CPI data, we may see this accelerate, but the market sold off last week. Thursday, Friday, we had major, especially Friday, had major nasty, or no, it was Wednesday afternoon through Friday morning, we had a nasty pullback. Okay. So it is possible that we will see the Fed maybe step up. However, they're not probably going to do it in March because we all at this point see it coming. At the same time, a 25 basis price hike move is priced in, and a 50-point basis hike may have already been priced in from last week. So we're bracing for that. We're aware of that. That stuff's going on. I am, as of right now, I'm bullish until those FOMC minutes come out at 11:30. I don't want to have a position by 11:30. So basically, however the technicals set up to trade in the day, then that's how I'm going to play it. And if I see there's really an opportunity there, excuse me, haven't had enough coffee yet. So if there is a setup there, I'll definitely be taking it at 11:30. I don't want to have a position on. Okay, I'm not going to bet whether or not the market is going to be happy or sad about the FOMC minutes. What I will wait for, I'll save some buying power on the side. If we get a big move down around 11:30 today, then by all means, I will try and ride the momentum on that. But I'm not really betting one direction or the other. That is actually gambling, and I'm not a gambler. I want to see clear direction in one way or the other. Okay. That all being said, going into today, again, we keep in mind our trader's mindset where we know it's probably buy the rumor, sell the news. Okay. And this is going to be a little bit tricky. The timing of this is going to be tricky because we not only have the all of this data that came out. We have the North American Home Builders Index is coming out later on around 10 o'clock this morning. We also have what is the thing that we have? Tomorrow we get the unemployment numbers and continuing jobless claims. Okay. Again, expecting all of this to look pretty good, especially as far as like the economy is concerned. And I will be shocked if we come to find out that Americans have more money than not. Now, what I do think is something to keep an eye on going forward is we need to watch evictions. There is a bit of evictions happening, and I know that kind of a weird segue into that. This could be a real problem. The other thing is those interest rates come up, begin to start to watch for foreclosures on people who during the pandemic were unable to make their house payments and didn't make their house payments. Okay. So be leery of all of that all of that possibility. So as of right now, we're going to go ahead. We're going to go to the chart. We're going to look and see what's happening on the chart. I'm going to clean it up a little bit for you guys, and we'll go ahead and sort of see which direction we're heading. But I do think that we are getting back on the bull. I think the market's going to head back in an upwards direction as of right now. They really have no reason not to, and there's tons of money sitting on the sidelines waiting to find a spot to come in. And so right now, unless we get a war with Russia in the next, like I would say 30 minutes, we're probably not going to see a real big market correction further to the downside. And at least for some time, till who knows what could happen next week? Who knows what will happen in March? Either way, we are looking at a place where we need volatility in order to continue our progress. Volatility is what allows us to have plenty of opportunity. So we need that volatility, but we will see going into today. That all being said, give me a moment. I'm going to set this up. I'm going to go over here. We're going to go ahead, go to the daily chart. I'm on SPY. I want to get to IWM. I'm going to delete this. I'm going to move this over. All right. I got to go into studio mode. All right. Now, for those of you who are in this. All right. Again, This is IWM. This is the ticker that I trade. You can see as of right now, what has happened has not been good enough to put, or 25. We're still just under yesterday's close. You can see that right here, 25, 205.97. This price below. This is where we closed at yesterday. This price down here is what we're below right now. This is in the pre-market. The SEC is not as involved in this. Again, something to watch for IWM is, again, you've got this low here, and this channel has been pushing towards the upward direction, really trying to reach that 50, and ideally wants to get back up over the 200. So things are looking good. One of the other things that I want you to keep in mind, a piece of news that we didn't talk about, is China, even though they're doing quantitative easing still over there, kind of going against the grain of things, their inflation data is starting to come down. Now, you may trust this, you may not. You might say, they're a bunch of communists. They've manipulated the numbers to make it look less. And in a lot of ways, they probably can do this because their housing prices have come rock bottom right now. That probably makes their data look really, really good. We will see what that has as far as raw materials goes. And again, big thing that we're watching right now is we're watching the really one thing we want to see is if the Russians actually do attack. It is February 16th. The memo from the Washington basically came out a few days ago and said the 16th is when Russia could possibly attack. So this could happen today or anytime in the next couple of days. So we will keep an eye on that. The Russians said that they were moving troops yesterday, but we still hadn't seen those numbers diminish at all. So it could be, who knows whether they're lying or not. Time will tell. Okay. Biden did come out and say that if we had to, we would fight. But he sort of laid that at the feet of kind of Russia. We're gonna adjust based on whatever. So we're going into the daily. We're gonna come over here. We're gonna check out the 5-minute chart next. Okay. Looking at things. All right. So on the 5-minute chart, again, one of the things that you can see right here, you got this flat spot at the 50, you got this flat spot at the 50, and you got this flat spot at the 50. Okay. These 3 points are kind of important. One, it's important to realize you get these like little dips right here below the 50 EMA, but it really is holding that up really pretty well. What we will look to see in this is something that we've seen before. We will look to see a pullback to this 200 before we continue even higher. That's just typical of what I've seen IWM trade as of lately. They can adjust it. They can do different at some point. They can do all sorts of stuff that's different. It doesn't have to stay at this rate. And if we do get, if that big money that is sitting out there on the sidelines does decide to shoot up, then we will definitely be, this will deviate, and we'll have a new market and new market conditions once the 50 stops tracking the 200 as much. Okay. And I can go and show you, we can go look back on the daily and you can see where the 50 got way away from the 200 and it traded completely different. Okay. For the most part, the Russell 2K has been a market imbalance for the last year. This year, again, it's making a lot of moves. It's got a lot of opportunity here. So we will see. Let's go ahead and look at the 1 minute really fast. We'll go down to the shortest time frame. So again, this is something that I've talked about before. Let me go ahead and zoom in on that a little more for you guys. Okay. So you see, leading up to the 5:30 hour, we get this big rise up. Okay. This is swing traders. Okay. And notice then all of a sudden we get this massive correction to the downside. Okay. Uh, this is exactly what I've talked about. Okay. Before we're saying this whole drive, a chunk of this comes from swing traders. And what the swing traders will do is they'll get a piece of news on the horizon that's coming out, and they will start buying up the stock before that news comes out. And what they're looking for is really good news to come out. And then what they want to do is when that news comes out and people come in to buy it, they want to sell into that round of buyers, those people who aren't buying until the news happens. And now what they're doing, obviously you can see it, they're selling the news. I can show you last week where this exact same thing happened, and it's always the same. It always performs the same. Now, again, a lot of times you'll get a lot of early buyers, and the buyers will be able to absorb the swing traders. But most of the time, what you see happen, big move up, news, crash. Okay, if you want a stock to look at, you can go look at Microsoft, MSFT. When they reported earnings, they had this stellar beat on earnings, and then they were immediately down 6%. So, again, I don't expect this downtrend to hold. I expect it to be like last week, where we're going to get a way down there, which is fine, way oversold, come all the way down, get deep in the oversold. I would be looking on the 1 minute time frame to the 5 minute time frame for that oversold reversal back to the upside. But at this point, I would say, this is just swing traders taking their money out. And part of the reason they do this is a lot of these guys are on margin. Okay. The guys who bought all of this, they're on margin. And the longer they hold out this margin, the more interest they have to pay on that margin. So they basically borrow money to trade. And that money, the interest on it's calculated daily, how many days they're holding it. So when the move happens, they want to take that money off, put that margin back, and pay off that margin so that they're capturing profits, right? Their equity doesn't outperform. Okay. So as of right now, everything looks really, really good as far as I'm concerned. This pullback is healthy. Two things about this that are going to be really cool is one, these pullbacks here, the VIX will calculate this and it will give us a higher VIX number, which means higher VIX number. Sure, it means more expensive options, but it also does mean that we will get paid more money for those options. Or they call it delta, which is how much money those options, how much more valuable these options are as you get closer to your strike prices. So the higher the VIX number, the more money those options can potentially make. The bad side of this is also the more money those options can cost you. So both in like if you pick the wrong direction for your options and if you because you're going to spend more on those options. Okay. But overall, the volatility is nice. Setting up into a good day for today. A lot of volatility. Definitely be looking for sharp moves to the downside as well as sharp moves to the upside as they try and get out. Again, I really do think they drove this market up pretty hot and heavy ahead of this news, and they'll be selling it, and they'll be basically looking for their next opportunity to really, really come in. I also expect to see up until that 11:30 meeting, I expect to see a huge run up like we saw last week. I do expect to see the 209 number up here, things looking just really, really good. And then from there, I do expect to see another kind of sell off or honestly, you could go either direction. So again, keep an eye on the technicals, stay out of as much flat shit as I possibly can. Anywhere where it can go either direction. It's bad juju right there. So anyway, with that being all said, for the Russell Journal, I am Russell. This is 10 to a million, and I guess catchphrase.